All right, let's get the microphone check out of the way here. I'll go ahead and turn this down on my side because I cannot hear myself think at the moment. There we go. Go ahead and let me know if you can hear me across the various chats, and we're going to get started here in just a minute. Let me turn the music down slightly here. All right, yep. Go ahead and let me know if you guys can hear me across the various chats, and then we're going to get rolling in just a few. Okay, let's get the music under control here, and we're going to get rolling. Let's see. All right. Go over here and make sure this is all set up. Okay. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is January 22nd, 2024, and this is our long-term outlook on the charts here. We're going to get started by looking at Bitcoin on the daily here. We can see that Bitcoin is now testing the bottom side lows here in and around the area that we picked out last live stream as a very important one. 40,300 is a low time frame area of interest. Of course, we do have the wick low here on spot coming in at 40,150. I believe this was swung just a little while ago here. Yeah, almost $40,000 even. We can see that the lower second standard deviation is right here at 39,630 or so. If Bitcoin does happen to test down in here and or close below it, I would be looking for a run of this weekly at around $39,000, of course, to the monthly at 38,500. Below there, we have that weekly support at 37.7 to start looking at least initially in the lower term timeframes, and that's if it gets below this lower second standard deviation here on the daily. So, there's been a lot made of the Grayscale selling into the ETF news after the conversion. A lot of people getting out because of the fees. Well, it was just revealed that a lot of the volume coming out of Grayscale is actually, FTX from the bankruptcy. So they had a lot locked up in Grayscale, so it's not surprising that they are letting that go. And I would imagine if they are planning to relaunch FTX, which is what the rumors are that are kind of swirling right now, then I would expect, for them to go into some of the other spot ETFs. It's a lot easier to get liquidity out of the ETF by loaning shares out and or borrowing against them. And, probably hold or convert and buy some Bitcoin as well. So I do imagine that this is going to let up pretty soon. What is pretty soon? How is that defined? Well, we're going to try to take a look at that on the longer term timeframes here. But let's get through some of the daily here. If Bitcoin can regain the lower first standard deviation and the weekly, so this is the criteria. It must close above the lower first standard deviation where it's currently getting rejected. Did see an initial swing of this lower first over here. in the the 12th to basically the 15th after it was regained. Did not quite hit the basis band there. Got right down to the lower second here and closed in between the lower first and second, and has been seeing that lower first standard deviation as resistance. So if Bitcoin can close above it, it's currently coming in at 41,500, and then subsequently get back above that weekly here at 41.8, then I would be targeting the weekly up here at 43.2 by the basis band. And of course, we need to see a close above this wick high, at least from here. Now, that may change depending on where today's candle closes, but we do need to see a close above that 43,570 or 569. Nice. I would say you'd probably want to see a close at like 43,600. That would open up the upper first standard deviation again, somewhere around the 45 to low $45,000 range to that monthly at 45.5. Again, of course, above there, then we would be looking right back to that upper second standard deviation by the next monthly at 47, and above there the highs again by the monthly swing high at 48,240, to the actual wick at 49, possibly even a run into 50K or mid to low 50s. Now, of course, there's a lot of doom and gloom. There's a lot of, it's all falling apart. The ETFs are failures, and they're not. The ETFs are fine. In fact, they're performing much better than even, insiders were expecting. I actually got to talk to a few people today that are involved in the business and are incredibly impressed, even if I could actually speak words. They're incredibly impressed with the performance of the ETFs, and I do think that it's a very good thing that we are seeing this outflow from Grayscale. Of course, as I said, about $1 billion of that we're finding out now is FTX. So, there's probably more, and I would expect, as price heads down, that we'll see those other ETFs see plenty of cash inflows. So when we're talking inflows and outflows, let's go over to this chart real quick, the regular clean chart without support and resistance. As I kind of just hit on a few points here. When we're talking about outflows, we're talking about cash outflows from Grayscale. And when we're talking about inflows, we're talking about cash inflows into these other ETFs. So I do want you to kind of understand the nomenclature there. Inflows are occurring at a really high rate on the other ETFs. Of course, you've got Fidelity and BlackRock leading the way there. But we'll start seeing the other ones get picked up as their sales teams begin really getting that pipeline built out. And I think that what it's going to take some time, but what the future holds is going to be very good for price action over time. But a bit of sideways is in order, and Bitcoin flirting with a breakdown right here, not out of the ordinary. I did want to drop right back to the 15-minute chart and leave off, pick up where we left off, I should say. Jeez, it's going to be a tough Monday, huh? All right, so we had, the very big volume spike over here. On the 15-minute, we talked about this being an area of interest. It got swung, not closed below over here prior to the $49,000 wick high. Once that area was broken down, we were looking for continuation to the next big high volume areas. Now we did see a bit of high volume on this low right here, held this entire consolidation down. But more importantly, because we are seeing things flirt with the lows right here, there is another, we had this big high volume come in on this wick low over here at 40,630. We had the big high volume wick low over here before the current high of the year and of this current run up. And then prior to this, we did see some big volume on the range lows over here with this wick low at 40,300. So let's go ahead and mark those out real quick again. Now, of course, I botched where that actually was supposed to go, but let's go ahead and get those marked out. And you know, the big thing that we got to pay attention to down here on the lows are these high volume areas of interest. Because if they break down on a close, that's where we can start looking at, you know, the lower second standard deviation, mid $39,000 to the weekly at 39K, possibly the monthly down there. I just want you to see how price is reacting to these high volume areas. So you can see that yet again, we have seen price bouncing in and around, you know, the first time that it got down to 40,300. And let's see, I still didn't mark that correctly. It's actually 40,300, even if I'm not mistaken. This is just not grabbing on. Let's go ahead and turn this off and back on. It's kind of finicky lately. Not getting it to really snap to these candle wicks. But the first time down here, Bitcoin swung the swung the 40,300 area, did not close below, bounced out, did the big old weekend consolidation up here in the mid to upper $41,000 region, and now we're seeing our very first 15-minute candle close below that 40,300 area. Now we can see that big volume has come in on this particular wick low that swung the actual lows of the range. So it is something to pay attention to, because now we do have this area close below. If the wick low is dropped at 40,150 on a close, which, you know, it's threatening right now to do so, with expansion on the 15-minute here, then we would be looking for further downside. Now we can go ahead and turn on some of what I've been watching. This was just the kind of zones of interest based on some of the move down here. You can see that the range wick low is currently being tested. Of course, the criteria is now if Bitcoin does take out this wick low here at that 40,000, you know, 40,026 bucks here on a close, then we're looking for, you know, continuation down to that lower second standard deviation, and or at minimum on a wick, but definitely, you know, showing that lower second on the daily here to that weekly, monthly area down below as being the next big viable targets. Now, I would still be waiting for a close below the lower second that also drops the wick low over here at 40,150. That would be considered a range break on expansion to the downside. That's where we're likely to see price play around in this weekly, monthly area, possibly down to the lower third on the daily at this weekly at 37.7. And again, this is an area that, you know, if it gets there, we want to see tested anyway. We saw this area as resistance over here at 38.5, you know, 3 times. Price moved through it and literally spiked right into that weekly close. And that was at $39,000 even. So, you know, there's nothing wrong with this price action. We want to see these kinds of retests. So we do see Bitcoin starting to get down into the upper $39,000 area now. Let's go ahead and take a look at the 2-day. Oh, well, actually, let's go back to the daily. There's a few things that we do want to look at here before we move on. We do have, you know, Bitcoin, a regular stoke on Bitcoin rather, in the oversold zone now. Of course, it can stay here for an extended period of time, especially when it's getting expansion of the Bollinger Bands to the downside, you know, breaking down below the current range lows. But I do want you to make note of the momentum pivot as it updates day over day. Of course, this is a regular stoke for those that might be new here. So close over close price action. It is not a stoke RSI, so it's not measuring the velocity of RSI. In this case, you know, 41,750 going to be the momentum pivot. So we do want to monitor this as Bitcoin comes into support, and or into even the lower second and third standard deviation area, whether it's, you know, slightly above and or in this zone between the lower second and lower third on the daily. You want to watch that, because if we start to see stoke turn, and let's just hypothetically say that Bitcoin drops the lower second into support and then regains the lower second, and starts to create not only a swing low, but starting to get that possibility of a closing low. You want to see Stoke turn once that begins. And then we're looking for the mean reversion play. Now, again, I talked about this, the band spread. Let's go back to this chart over here. We'll take a look at this real quick here. Let's go to the daily. So we are seeing some volume come in. It's not anything crazy right this moment, but you notice that the bands are still fairly spread out. They're spread out within a range, and more often than not, it's not always the case, but more often than not, when you're testing the lower second and third, when the bands are spread out like this, and or the upper second and third, you're likely to see reversals off of those areas. It does not mean that Bitcoin is ready for a reversal right here, right now. It is something that you want to wait for, at minimum, a lower term time frame swing low and closing low that then gets follow up on what we just talked about on the daily. So, we do see compression to expansion. This is still expansion. We do have fairly volatile price action within the bands, and it can still get outside of the bands. It can close outside of them for a couple of closes. If it starts to regain these lows here, the wick low, if it loses it at 40,150 to the closing low up here at around 41,200 to 300, then we're likely looking at a reversal right back into test this range again. Now, it would have to remain to be seen whether or not it could go to the top of the range, form some sort of a trend after getting a trend break. Especially if it closes like this, I would still want to see 43, 570, 600 area taken out to the upside on a close for a real trend break. But in terms of swings, we do have a little bit of a swing high here. I think even on a swing indicator, it's actually probably not on a swing indicator. Let's see what the swing indicator says. No, it is. So yesterday's wick high, it is calling a swing. That's a valid swing. Of course, price getting back above there needs to take out the 42,160 and then subsequently 43.2 to 43.5 to 6. So, I would just be cognizant of what's happening here. And, there is price action that we can reference that's not, too far back, all things considered. And, if I was going to pick anything, it would be back here from the high on expansion that was put in April of 2023. So we saw the consolidation compression that was a little bit deeper than the compression we just saw. Nice spike up into the upper second and third, comes back down, starts to reject that upper first, come back into range, ranges around, it starts to lose the lows, but not closing below. It does get a close below the lows, and then it pops back up to the top side, but you see that the bands were a little bit spread out in here as it's coming up. Starts to get that compression, starts to get expansion, starts taking these lows into supports over here. Hits this high over here in the mid $24,000 to $25,000 area, pops back up on expansion, ranges, gets some compression to like a slight expansion to the downside. So this is not like what we're seeing now. We're more looking at price kind of like this over here with the spread of the bands. But we did get compression after a new high was put in, from the lower lows to higher highs, nice consolidation. And then, of course, we got that sweep of the low side range into this support yet again before moving on to the current iteration of this move, this nice big upside move. And, this is something that you should be expecting, and we've talked about this for quite some time, and that is mean reversion. So let's go ahead and take a look at the higher term time frames, and note that on the weekly, this is starting to drop that $40,000 area that we've talked about for quite some time. So this candle over here, if it does drop it on the weekly, of course, where are we looking? The basis band. Basis band is currently coming in at 36,250 now. So, hey, does that sound familiar? Well, it does, to me at least. I hope that you remember this zone because it's the one right down here. If Bitcoin does start to break down below this weekly monthly at 39 to 38.5, where are we looking? The next weekly area, and that is 37.7 to 36.2 to 3. Big area. We now have the basis band in there on the weekly. We have a big consolidation structure that was testing the monthly and weekly overhead resistances, not just in this area, but the area just above it. So that is going to be the next major downside target, and it is conditional. Bitcoin needs to get expansion on the daily and start breaking down below the weekly and monthly here at 39 to 38.5. It can swing down below those areas, not really looking, the criteria, because price is so close to 37.7, it can even spike down into the weekly here at 37.7. I need to see clean and clear closures below the monthly that then start to work their way below the weekly at 37.7 to start targeting the weekly here at 36.2 to 3. Of course, that's where we would target the basis band on the weekly here as well. I do want to note that the upper first standard deviation, which is up here, not down here. We'll talk about that in just a moment on the lower. But the upper first is at 42,500. So it has moved up. If Bitcoin does regain that this week, likely going to put in a swing low and a close low. And then we would be looking where? Right back to the upper second standard deviation, somewhere just below the wick highs here at $48.5 to $49,000. Of course, if Bitcoin does spike down to the basis, we have that 36.2 to 3, which is right on a weekly support resistance level. And by the way, that's this weekly right here from January of 2022, and this was the big consolidation structure prior to redistribution. So this was the lower high structure up here that was just swung at that 38,240, and then we had the low side of that particular structure before putting in that lower high of the bear market, where the close is coming in right at that 36.2 to 3 area. Now, below the basis band, we can see that the lower first standard deviation on the weekly is now at $30,000. So it did update to the key area that we were just talking about last week. It was slightly below. And, this is going to be a big one. The only way to really get there, of course, is to get through all of this support here at the weekly at 39, monthly at 38.5, weeklies at 37.7 to 36.2, and then a big retest at this monthly, which was prior resistance and then found as support, and very good support at that. So something that I do really like is when we see a really rejective area flip to support and then come and work its way right up to the next supports. Now we're coming in, of course, to try and test that area here at the 38.5, but that monthly weekly zone is going to be the big one. That's at $35,000, of course. That is a monthly close, very important one. And then a weekly close just below it at 34,750. Remember, this is the one that got spiked on the daily on that wick low, like nearly to the penny. If that area is lost, then we're looking down to the daily redistribution zone from a little bit of daily reaccumulation and redistribution that was pretty important in the bear market. And that was at 32.3 to 4. We have the big close that marked the real. Not only did it solidify the 38.240 lower high of the bear market, but it also was the close that broke the lows of the bull market. So that was the monthly close down there at 31.8. And of course, there's weeklies directly below there at 30,600 to 300. So right in that $30,000 zone where the weekly lower first is coming in. So, this is what we want to see. We had a nice big up move on a swing and a close. Of course, we had the accumulation here, the spike down to 24,700, 900 area on these two lows. And then we had a swing low, a lower high rather, to a swing higher low, and of course closing higher low from this low here that then led to this giant move up coming into the ETFs. So we do want to see this come back and set a higher low. And as long as it's closing above this last wick low at 26,521, then it would set a higher low on a swing. And of course, on a closing basis, that number does move up to 27,186 or 27,2 if you like. I would expect this to go into a bit of sideways consolidation, to be quite honest. If it does eventually work its way down to test this structure, great. Doesn't mean it's going to. But if it does, I think that is probably going to present everyone with opportunity. Of course, not financial advice. Do your own research, all that stuff. But I do think that these are the things that we've talked about quite a bit, and I will reference right back to the chart that I posted on Twitter and have talked about extensively with you guys here, but is worth showing again. Every single solitary bear market to bull market for Bitcoin, what have we seen? We see the bear market high being put in, the first bear market high specifically. We get either just prior to or just post expansion on the monthly time frame. We see a swing of that high and then a mean reversion back to somewhere around the upper first standard deviation. But the point being that it is another swing high that's put in, sometimes a closing high. Depends on the asset or indice, but in this case, we're looking at Bitcoin here. It did not get a closing high, but it got a swing high where it swung the bear market lower high, or at least the first bear market lower high that kicked everything off. We get that swing. We get the swing of that area, comes back down, swing low, and then expansion continues, at least here from the 2014 to 2016 timeframe. Of course, we've got the first real bear market lower high. Yes, there was swing lower highs from 2017, but into 2018. But the real bear market lower high on a close was this guy here in 2019. We saw this area swung on a 3-candle structure, which was a swing high. Did not get a close, so it was not a closing swing. But in this case, it was a simple swing to swing high to swing low. This was just prior to expansion, unlike 2016, where it was post-expansion that it did the swing. In 2020, it swung the first bear market lower high on a close, and then kicked off expansion directly after that, of course, to new highs. So what are we seeing now? Same thing yet again. We see the first bear market of 2022, the first bear market 3-candle structure or closing high, come up, swing it, and then could this set in a high on a close? Yeah, absolutely. I really wouldn't be looking for too much more unless it drops that upper first, and that upper first is coming in at $34,000 right now, so just below the monthly close over here at $35,000. So would be an area to pay attention to, because in every single instance that we've seen the bear market, the first bear market lower high close, when it does get swung, every single time we've seen the upper first standard deviation of the Bollinger Bands get hit on the monthly. Now, we do need to note that expansion of the Bollinger Bands is active right now, so it has kicked off. So this would be considered post-expansion. Now, there is an argument to be made like, hey, this could flatten the bands out if it does close below the upper second standard deviation, and that is valid. And the main reason that is still valid is because BBWP has not turned up over the moving average just yet here. I would expect it to get close. In fact, it showed mean reversion on the monthly to go test this, lower, higher low structure rather, and lower high. So it is a bit of mean reversion back into a much bigger range for Bitcoin. And here's what I'm going to say regarding this, because this is something that I don't think a lot of people would be prepared for, and that is an extended sideways period in Bitcoin for accumulation before a much more massive upside move than I think many would even expect. I kind of look at this, it depends on how, February into March close. Expansion is kicked off for the Bollinger Bands. We have not seen Bitcoin ever go into a sideways consolidation, but we've also never seen, Bitcoin hit the lower second standard deviation of the Bollinger Bands either. So what this tells me is that this could potentially become a massive accumulation, with the upside being the wicks there at $69,000 and the low side being, the $15,500 wick lows. So that is something that I have talked about in the past. Now, as it stands at this moment, anytime that we have observed expansion of the Bollinger Bands on the monthly, it has always led to new highs. And in this case, meaning, swing the lower high to new highs being, in this case, a brand new all-time high. So I would be looking at this as from that lens still. So swing the bear market lower high, come down, find support, and then pop back up, create that closing uptrend, or continue that closing uptrend. And that is not something that it would be out of the ordinary with the halving coming up Q2 of this year. So I would still be looking at expansion being active, and this being the expansive phase with a nice pullback like we've seen in prior cycles. But I do want you to understand that things don't always play out the same way. They might, they might rhyme, but we might see that rhyme go on for a long time. And there is bigger players in this market that will be the deciding factor, in my opinion. And it's not, it would not be out of the ordinary to see Bitcoin go into a, quite frankly, long form consolidation within a massive range that then begins to play a little bit more technically over time, or decrease in volatility for a period of time, and then come back to it and have things like actually become such a superstructure that when it blasts off, it's going to blow people's minds, kind of thing. I think that this is going to blow people's minds anyway. I do think that that's happening. I just don't, I can't tell you based on, what comes next. If things did drop down below the upper first, we're looking at like a massive accumulation, down to the basis again at, mid $25,000 zone. And that would be something unique and new. So could this time be different? Based on what I just showed you, it's painting just like all of the other times. Swing the bear market lower high, come back down, find support, take off to new all-time high. Swing the bear market high, come back down, find support, take off to new all-time high. Swing the bear market lower high, from 22 in this case, come back down, find support, take off to new all-time highs. So that is where I'm at. And until that cycle breaks, I'm not looking for it to change. It's not my first take on things. But I do want you to understand that now that there is bigger players involved in these markets with a vested interest in accumulating Bitcoin for their customers, right? It's assets under management. You must remember this for those that maybe just keep hearing like BlackRock and Fidelity and all these big evil corporations that they think are evil or whatever your opinion is, doesn't really matter. The fact of the matter is it's not their assets. They are selling these assets to customers, and it's assets under management. In this case, it's the customers and the customers' portfolio managers that are the ones that are going to dictate which way things head in the longer term. And if we see things go into a much more massive accumulation on the monthly, 2-month, and quarterly, man, look out, because when it resolves to the upside, I'm not going to be looking for this to resolve to the downside. It's just the math does not work out. And in fact, there's things that I'm going to get into over the course of the end of this month into next month that are going to hopefully explain my position on that. Is if it is a more massive accumulation that things go into, that the upside resolution is going to blow people's minds far beyond what many are calling for even right now. So yeah, I think that's pretty much all my thoughts on this. We are looking at a potential initial cross down on any closes below 39,400 on the monthly. So this would be an initial cross down on Stoke. We've seen this cross down from 19, reset, head up. What did we see? This was 14. That was the lower high, though. This would be still considered a bullish. We would look for the cross to come down after a high gets put in, or on a swing basis at least, which is looking likely this month, unless Bitcoin can pick itself up in the last couple of weeks here. But swing high painted, you're going to see this cross down. If a closing high paints, you're going to see it likely lurch over. But we're still looking for, generally looking for a bullish reset on this over time, mainly due to the 2-month. And the 2-month chart is going to be something that we're going to focus a little bit more on coming into February, because obviously that will be the monthly and 2-month that we need to watch, because it will close at the end of February, which is a short month. So in this case, 26,240 is the pivot on the 2-month. Of course, we have that quarterly that is pointed up, and that is pivoted at 25,800. So, I gotta put it out there. It's not out of the ordinary for quarterly pivots to get hit on Stoke. It's not out of the ordinary for 2-month pivots on Stoke to get hit, and or the monthly. In this case, we're looking at a possible cross down if Bitcoin does close below that area. And even coming into February, it's either got to shit or get off the pot, because that number is going to be above price action due to the swing high. Man, I'm having a tough time. My apologies today with my voice. Let's go ahead and kind of dig into Bitcoin a little bit here, as it threatens to move down to our lower second on the daily. And there it is. Very nice. Right into that lower second standard deviation. So this is going to be the breakdown that we're looking for into the supports down here. And use logic. I know a lot of people are looking for like big, massive moves right away. But, there is an area of interest on the swings and on the closes right here, at 38.5 to even that swing at the 36,700. So there is a weekly there, of course, at 37.7, but I would take the daily structure. Closing structures coming in at 37.7 to 37,800 right here. So big area to pay attention to. Now, if this wick low is dropped at 36,712, then we're looking at this structure over here. We're looking at the high side structure coming in at 35.5 to the low side structure coming in there at around that 37,400 weekly area. Below there, it's big problems for Bitcoin in terms of trend and momentum to the downside, as you would see the weekly, of course, likely pointing towards that lower first if it does breach that 36.2 weekly area, and the basis band, of course. Now, the big thing on the weekly is going to be the momentum, right? It's still, it's threatening to come out of the overbought zone. It's headed down. We're looking at a 46,500 momentum pivot. It would be a multi-week move before things really start picking back up to the upside. And I would be looking at aggressive moves on the daily to the upside as likely to be sold into until we see the weekly turn again. We see some sort of a consolidation to re-expansion on the weekly, as the Bollinger Bands are pretty far spread out right now. We are seeing, that move back in terms of mean reversion. We would need to see compression to expansion. So we're looking at a bit of a lull in Bitcoin, even if we do see the daily, regain the range and spike the highs. So we're looking at this being a bit of a longer form consolidation or move in this case. So I think this is good. I think it's very good, especially coming into the halving. I think this is a good thing to happen now. I think it's well timed, and I think that it's going to start presenting, lower term time frame bounce opportunities, of course, maybe even daily opportunities as well. But overall on the weekly, once we see that weekly compress and re-expand here, we're going to be looking at some very good opportunities for very good trades once volatility on the weekly begins re-expansion instead of, in this case, we're seeing volatility of price to the downside, but it's all in the context of mean reversion. So let's go ahead and dig into a little bit of quantitative analysis. We're going to take a look at open interest here. We see open interest is dropping off the map. That's what we want to see. We want to see derivative traders get wrecked. In this case, on the daily here, and I've mentioned this before, this is the hourly chart. As it's losing the range, we're getting down into the low $10 billion range here for open interest on leverage contracts. So that's what we want to see. Let's reference where Bitcoin is in terms of open interest on the daily chart, though. And this is where things get very interesting because, without bigger players in the market, even, it just disappeared, or what happened here? Did it bug out? It bugged out. Let's go ahead and reset this. Okay. Well, while that's resetting, we can come over here and I want to show you CME is sitting at 4.5 billion. So we are seeing open interest come off the board. Also note that we have repositioning going on coming into the end of the month for contracts. So for options contracts, and then coming in, there's a quarterly plan. You've got your calls and your puts on either side, whether you're buying or selling. Doesn't really matter, bracketing where price was headed, possibly catching the impulse to the top there. But you're going to see some readjustment of those contracts throughout the quarter coming into the second quarter prior to the halving. And what you want to see here is that Binance open interest is coming down faster than CME. You want the professionals leading this market, not the degenerates and the players that cannot be monitored. So we want to see CME actually leading this market. We are. They've got a 2.3% drawdown, or 2.9% drawdown right now on the hourly. Past 24 hours, about 282. OI change, or 4 hours, 282. OI change over the past 24 hours, though, has dropped significantly, but still we're seeing the larger drop in the lower term timeframes on Binance, Bybit, and the rest of the Wild West exchanges. I do want to come back to the taker buy sell ratio. This is going to be something that we want to monitor. Now, in the context of a downtrend, this is something that we want to monitor on the daily here. So we can see that it's getting back down to a 9.2 on the taker buy sell ratio. And the areas that we typically see it bounce from, and this is, until we see a trend change on the daily, this is not a reversal indicator. This is just areas of interest for a bounce. Taker buy sell ratio typically down around this 8.8. So, and you could even call it an 888. So 0.88 to 0.9 area is where we like to see this. To start looking for those lower term timeframes to potentially provide a bounce. Of course, we need to see structure built on top of that on the daily, but it's getting there. It did spike down, and then as Bitcoin came back up, it did peek its head into the green areas here, and then obviously with the taker buy sell ratio dropping like this, in conjunction with OI just nuking. Which is what you want to see on a move like this. You want to wash all of these high leverage traders out of the market, all the range low buyers on higher leverage getting wiped out. I mean, if you're getting wiped out, if you bought the lows and you're on lower leverage, you're actually just chilling. So this is all high leverage people exiting positions. You probably got shorts taking profits here as well. But I wanted to get to the daily if it'll actually let me here. All right, so there it is on the daily. And I want to mark this chart up just a little bit here. And the reason why is because we want to look at the areas of interest for where OI was in relation to where price was. So we're seeing OI trade at around $10.5 billion, $10.25 billion. as it currently stands right now, which is basically the top side of the 38,500 area. So we saw the higher highs on a close here at the monthly there. It's 37 wicks were up into that 38.5 zone, 38K zone. We're seeing open interest right around that area as price heads back into that area. Again, providing some confluence for that zone. Now, obviously, it did spike up a bit higher prior to even getting there in around the 36.2 to 300 area, that weekly. So we've got literally OI spiking into the weekly. We saw initial rejections there at 36.2 to 3. And then we've got it spiking the monthly just above that weekly area, as well as the weekly at 37 to 37.2 as it spiked in those areas to 38 to 38.5. It was on lower OI and it kept moving up. So what you want to see is we've got, of course, a downtrend here with a nice top. We've got a range break. This is going to be our next big area to watch, but you do want to watch for the potential of higher lows versus this range and potential lower lows from that range. So the lower low on OI is right here. It was a higher low. It was 9.9 billion or so. If we see a lower low on OI while trading and closing above 37.2 to the wick low here at around 36.7 to 800, we see a swing low followed by a closing low put in, then we would have some OI divergence with price. So basically, relative to price, the same amount of OI or less, price has maintained its markup. So we would be looking for that to develop some sort of a potential divergence on OI. So lower low OI, higher low as it relates to this range down here. Only if OI can get there. Otherwise, if it puts in a low here, for instance, swings right back into range, there's no divergence on OI. It's just it's a move down in open interest. And I do want to zoom out a bit here as well and note that when OI is falling, price is falling. So you do want rises in OI, but OI has been falling into basically even the area that it was testing back here. So on the highs of, April to July, so spring to summer in 23, we saw Bitcoin hanging around the upper nines to mid $10 billion range for open interest. And it's in that range again. So if it maintains its price appreciation and consolidates at a higher level, that's where we're looking at, the spot market is very strong and very stable. So that's going to be that. We covered CMEs leading the way, taker buy sell ratio. And then I'm going to call your attention back to the Bitcoin bull market, bear market indicator. Look, it's been pretty damn accurate. So it's calling this bull still. It is, it's not an overheated bull, never really got to, what you got to remember is this thing got to an overheated bull back here in 2019. We've seen spots of overheated here and there on this move up since the beginning of 2023. But we're not really seeing any kind of reversal, and it's a little far away from a reversal. Even if we did see it in the context of the halving coming up, the expansion on the monthly, the structure that's being built right now, I would still be looking at that as an incredible opportunity. More importantly, the inter-exchange flow pulse is going to be a little bit different now. I think they're going to have to massage this metric or update it because of the inter-exchange flows from Coinbase Prime for the custody of the Bitcoin for the ETFs. So one of the big things, though, is the IFP is below the moving average. I do think this is going to bullishly reset. It's painting red now for a couple ticks in a row. If you like, we can full screen this. I wish that I could get the that this chart was a bit adjustable, but it's not, unfortunately. I'm gonna maybe contact them and see if they can. There it is. There it is. So we've got we're in the red zone now, and this is where the IFP is below the moving average. Moving average is sweeping over. So whenever we do find a low on the daily, we'll come back to this and see what IFP is doing in relation to the 90-day moving average. This has been incredibly accurate at calling the pullbacks, and we saw the crossover right at the tippy top here at that $49,000 spike on the wick highs. So something to monitor going forward as well. And then we're gonna keep doing our traditional analysis so that we can get our banger trades in. We see the lower second standard deviation has been swept, and I do want to remind everyone that we are coming into support in an area that was rejected. So if we do see this, kind of tease around that area, don't be surprised in the lower term timeframes. This 39K weekly to 38.5 monthly probably going to get front ran, especially with the fresh washout in open interest, repositioning, profit taking, that kind of stuff. What we're looking for is for this to settle down and go sideways, and maybe even drop some more. If you do see a swing of that area or front run, then price pops back up and OI drops, that's your shorts getting wiped out. That's your late shorts. So that could potentially lead to the range above getting regained. So I wanted to get today, take time today to kind of articulate those thoughts. And then I want to go down and take a look at, I think the conversation that I was having was with one of you guys about the high volume areas and how to gauge them. Well, you're seeing right now those high volume areas, and what we're basically moving on. We're moving on to talk about volume again. And this is the 40,600, 40,300 high volume 15-minute candles that were kind of defining the primary lows, because the 150 or 40,150 swing on that wick never closed below the high volume swing low of the actual lows. So all the way back here, it is a 15-minute. So we've got the 40,600. I still think that this is not connecting correctly to this low, and it's bugging the crap out of me. We're going to strong magnet it and see if it does it. There we go. It is 40,625 and 40,300. So this wick low back here was the primary volume area. Then we had the 40,150 wick low, no swing, closed below. No swing, closed below back here, at least initially. Now we have the swing and close below. So like the shorter term time frames, once price came into that 40,300 back here, once the swing low and the 3 candle low was in, stop goes below the wick lows for me personally, and then I'm playing it back to support resistance, right? You can use volume for it, but entering basically on the reclaim in many cases of like 40,500 or so. Once the closing low is in, the first area to pay attention to is about $300 higher. Next area is this area here at 41 to 41.1. And then you're looking to, once you take the lows, you look to the highs. And this area, of course, it did stop right around this low, spiked into that low, order block, continued on. So target the highs from, you just work your way from lows to highs on your profit taking. So for scalps, and then this area was a big one. Once it reclaimed this, it swung this high up here. And it did close above that wick ever so slightly. So that was, you just work your way from low to high swings. And then, it spiked the weeklies. So there's higher time frame resistances as well. So spiked into the weekly and then deviated above it for two candles. Tried to regain it again and then sideways. So now, you can play the other side of that. We see that we got expansion on the breakdown here. This would be a very short scalp, probably on the 15 or the 15 as it relates to the 5 minute. So probably a 5 minute or even lower scalp. But, playing that 40,300 breakdown, you're at least looking for wicks down below to go test 40,150. It got the $40,000 area, so it swept 40,150 at the range lows, and then it broke down to new lows. Now, what you got to be aware of on the other side of this is anytime that price is getting to these areas and setting high volume wicks, note divergence. So we want to know where divergence is. So if we're playing a scalp, there's bullish divergence on this low. So at minimum, if we've got a swing low in. If it can set a 3 candle or 4 candle low, right now the low would need to be set on a close at 40,200. Doesn't give you much room. That's basically a retest. So I'd be looking for a reclaim of this range and then up. But maybe in like the 5 minute, there's already a 3 candle structure possible. There is a 3 candle swing low, no close low yet. It could be putting that in right now. If it regains the lower first, then we look to the basis, so on and so forth. But that would be your counter trend trade. I don't advocate catching knives. If you're going to look at the 15 minute, what you want to see is the volume come in, swing low set, closing low follows. You can take the swing low if you're aggressive. I would say check those closing lows first, or at minimum go down and get on some of those lower term time frames. So you'll see that the swing low won't even be in until we see now a close above this middle candle here. So this close was at 39,784. We need to see this third candle close above there. You'll see the swing low get set. And if it closes above this open at 39,900 basically in the next 15-minute candle, then the closing low is set. We'll see divergence populate. It'll be active at least to go back and retest the breakdown. You want to see Stoke follow. 39,764 is what would turn that up. So we would have confluences there. The other factor is we have BBWP 100 over 98. Now, the danger there is we are in expansion we need to see mean reversion. And what we have seen, because this is a strong breakdown trend, likely, outflows from Grayscale. But we need to see BBWP get below the moving average and start curling over while this sets a swing low followed by a closing low. If it doesn't do it all at once, and then retest and regain the breakdown to look for more. Otherwise, you shouldn't knife catch, and you should know where the half hour is, right? Half hour is still getting expansion to the downside, so this is not over yet. Man, I'm having a tough time with the arrows here. 90 over 87. It's still in an expansive posture on the 30-minute chart. So it's, even if it does mean revert, it is likely that it's going to get rejected. 39,950 is the momentum pivot. We've got the hourly is expanding, so we're not looking at this, on the lower term time frames. These would just be mean reversion scalps on really low time frames. Now the hourly is setting very nice low relative, a very nice low. If it can set it on decent volume, yes, it is lower volume. Oh yeah, that magnet is strong as hell. It is lower volume than what we've seen on these lows down here. So on the low, it's over here. That was at the 40,600, breaks down. Not a ton of volume in on this candle. I wouldn't be measuring it versus this. It's only if this candle up here is only relevant if we can see it regained. The volume doesn't have to be higher than this candle or anything like that. But volume not really picking up. In aggregate, it has picked up. Probably on these lows in this area, if you were to take all of the volume in aggregate, it probably is around that 40,600 level. But I'd be cautious in reading it like that until you see a 3 candle low structure put in. Need to see closes back above basically 40K for the hourly to turn. 2 hour is expansion to the downside. It is continuation. 40,000 again would turn it back up. So I would be aware of, like I said, front running occurring that then pops back into range. So that is something to consider right now. 40,200 is the momentum pivot for the 4 hour. We can see it's getting expansion. This is not, now, to be fair, it is right at the level that it did stop at the last time in terms of expansion, but this is pretty fresh expansion. Nice compression, close below the lower second, get that expansion, tried to spike in and regain the lower first and failed miserably. Next candle's down. So, I mean, it's a pretty easy setup on the 4 hour. So if you're trading the expansion from this range, which I was noting over the weekend that it was just a pinner range. And as soon as we see expansion, it's either going to get picked up or it's going to continue through those supports. And we're seeing that continuation at least down to the supports and then through. But that 4 hour compression to expansion was easy to catch on the lower term timeframes. In fact, just to show you this right here, I'll mark it. It is marked in teal. I apologize if that's hard to see. Let's go ahead and just use let's use a white line. Let's see if that'll show up better. All right, so if we go down to like the 2 hour, see the 2 hour got expansion at the same time. If you go down to the hourly got expansion. So this was, you got to remember, this is the open of that 4 hour candle that got expansion. The hourly told you in hour 2 of that 4 hour candle that we were expanding down to test the $40,000, 40,600 level. So that was a pretty easy Sunday setup to the short side. Even getting that rejection at the lower first to maintain trend to the downside. Rode the lower second right into that support. So we got 2 swings of that support and then into it. And then the move back up to test the basis at 40,800, never passed the other swing, did not close above it, rejected, got back below. And then this is just continuation. Now I will say that, this can continue trending. And what you're looking for is for the lower first to get tested at 40,300 and rejected. Right now it's rejecting on the lower second at 39,950. So basically 40K, about $300 above that, 40,300. Strong trend. It should reject there, but it can come all the way back to the basis. That's at 40,700 to 800. That, of course, would be a reclaim of this support here, or support resistance area prior support that broke down. But we would at least be looking for a test into around 41 to 41 200. I think I said 41.8. That's not correct. It is still bearish, even below the upper first, which is at 41,160. And that's where these 2 rejections on a wick came in. So unless it reclaims these wicks and closes, still would be considered bearish retest. That is provided that it can even pick itself up. Right now it's rejecting the lower second in the lower term time frames. We're seeing the lower second on the hourly get rejected. Something to note here is the 6 hour as well. We're not seeing like stupidly aggressive bull bands on the pinch and then re-expansion. So I would be aware of what's happening here. But we do see expansion of BBWP. So this could just lurch right over and get decent expansion in the next close. The next 6 hour close is coming in 3 hours and 52 minutes. It is currently trading below the range lows there, specifically that 40,300 for the lower second. So as long as it's trading and closing candles below around that 40,300 region, looking for this to continue getting expansion at minimum in the next candle to test these lows and or the wherever this closes. If it does just straight up reverse, you're looking for it to close above there and the lower first on the 6 hours coming in at 40,800. It could bounce all the way to the basis, still bearish. That's 41.5. If it does test that upper first, guess what? It's still bearish. So you could see this pop all the way back up to 42. It would need to get up to at least the upper second, which is still bearish in the context of the daily. But, if it did start to regain 42.5, by the upper second, we would have to be aware of where the daily is and then come back to it. That would put it above the upper first. I'm sorry, lower first, not upper first. That would also, any closure above the lower first at 41.5 would turn Stoke back to the upside as well. And, possibly take out that swing lower high. Again, anything below 43,600 at this point is bearish. So any daily closes below there is bearish. You can play the mean reversion plays on the lower term time frames. Be careful, don't catch knives. If you were in on this on the short side of things already, congratulations. That's what the position that you should have taken on expansion to the downside, at least from the hourly and lower term time frame perspective. Be careful if you're a breakdown trader of this regaining 40,150, which is the wick low, and then the range lows at 40,300 to 600, because you're likely to see this at minimum test on a spike up into the 41, maybe even mid 41K area by the lower first. So, it's got to close above there. By the way, 41.5 needs to close above there for any of this to even have the potential to change at this moment. So, yeah, spend a lot of time on Bitcoin today, mainly because we are starting to see some of the things that we want to see, which is the move down. Could turn into a deviation. Door's still open for that. Let's look at the 2-day, actually. Yeah, this is the 2-day lower second standard deviation. So this is going to close today and move down. It's currently at, basically $40,000, $39,800. This is going to tick down, so it's likely to be in the 38 to 38.5, maybe even the 37 to 37.5 region on the. It's probably going to be more if it closes above the lower second. It's probably going to be closer to the monthly at 38.5. If we see price close below the lower second, it's going to be below. The price would close below 39. In this case, 40. 39.8. It's likely to chase the opens on the way down. So be aware of that. What's the 12-hour looking like? 12-hour is expansion. Yep, a little bit of re-expansion on the 12-hour. 12-hour turned down below $41,000 as well. So, continuation at minimum on the daily 12-hour and lower term time frames. It could lead into more coming into this support. Beware of deviations. So, all right. I think that's going to do it for the Bitcoin analysis. Spent a lot of time on it again today, but I wanted to address a few things with you guys, show you a few things that I've been keeping track of, and then follow up with some of the questions that I got. So, all right. I mean, the 5-minute and lower might retake 40K here while we're talking. I'm going to take a look at chat real quick. Hi, Baba. No name. We've got Sam Alk. Hello. We've got Bobby, Jedi. We've got a few others that are hanging out, just not chatting right now in the public chats. If you are on x.com in the live stream there, I don't have a way of monitoring that chat right now. I'm only able to stream through my streaming software there. So if you want to jump over into chat, come on over to YouTube. It is linked to my main profile there. It is Landy's Crypto Corner. You can join the chat over here and give me some input or ask questions. If you are on Twitch, which I do see a few of you guys there, and you want to chat, come on over to the YouTube chat, Landy's Crypto Corner. It's much easier for me to see things from there. All right, don't really have too many questions or anything like that right now. Praying for the dump. Let's see. After two massive bullish deviations, it's now time for a bearish deviation. Yeah, I mean, you did get, we had one really big deviation, I would say, for this range. I don't think the other one was a really big deviation. It was a nice wick high to downside sweep, and then a big deviation of the range. It would not surprise me in the least. Like, look, if you're gonna look at this as a deviation, it's really simple. Well, I already have this here. It is this here for the downside range. So the range low, close open, and then the range wick low. That's your deviation zone. It must reclaim 41 230 though for it to be a deviation, and a valid one at that. If it does that, probably looking at that swing at 41 41.8 getting taken back, and of course that's the weekly over here. So just reject this weekly at 43.2, reject the weekly at 41.8, head down to hopefully test that weekly monthly area. That's what I'd like to see. Maybe even a little bit more. All right, let's go ahead and look at currencies and bonds. Let's take a look at Dixie. All right, Dixie still flirting with the possibilities of going and testing its current high structure on the daily, which is around the upper second. If it can close above its wick here, its swing high at, what do we got here? At 103.62, 69. Are you kidding me? Yeah, it's 103.69. Nice. If it does close up there, we're looking for the upper second to get tagged at 103.84, 85 region to the low 104.21 to 104.25 area. So this swing over here, if it can regain it, mid 104s is the next big area to watch out for. It's trying to reverse its structure. It's got the daily downtrend, nice consolidation, swing lows to swing high here, and a consolidation low set. Nice bounce off the upper first at 103.10. If it does lose that, I'm looking right back to somewhere around 102.5 by the basis, to the basis, I should say, around 102.25 to 35, which is the bottom side of this range to the basis. Below there, we're looking at 102 to 101.75 or so. It's actually, no, it's further than that. It's 101.62 down here by the lower first. If that area is dropped from here, right now kind of a thing, which I doubt that's going to happen, but if it did, lower seconds the next area, which is right at the lows here on a close at 101.21. So that is the Dixie outlook here. Looks like it wants to test up further, at least initially right now, but this could turn into a complex high. It's got to drop the upper first though, like 103 to 103.10. If it does that, probably going to put in a high. 103.32 would do it. It's going to momentum's going to chase price right now. You can ignore the lines here that does this for these charts up top there, but it is in the overbought zone. Doesn't mean much until it actually turns down and we see price put in a high. We are not seeing a high structure, but if it does drop on a close 103.23, that would be a closing high. And of course would need to drop the wick and of course its current low of the day at 103.11 where it tested the upper first. So basically close below the upper first, and we're looking back to this little consolidation range, 102.5 to basically 102. When looking at commodities, we can look at gold. We can see that gold is still hanging out in this wider consolidation. 2016 spiked on Friday, spiked right back to 2040 bucks. Did not quite get to the basis. Now it's trying to hang on for dear life to that lower first, which is at 2023. Trading below there, and then, of course, losing 2016. I'm looking right back to this current low side structure by the lower second, around 2000 to 2004, below there, where 1980 to 1965. Need to see that area hold up. If it does get there, that's going to be the big zone of liquidity down here. So let's actually go ahead and let's draw a box around this area, because this is going to be the most interesting area. If we do see closes below the lower second, we would be looking for things to eventually work their way down to this area at 1980 to 1965, maybe even more depending on the time frame you're looking at, but we'll look at that midweek this week. Now, if we go to traditional markets, we did see them all making new highs, and it looks like this is continuing. New all-time high today on Dow. We saw the upper third get hit. That was our target, actually. Wow, nice. 38,100. It literally hit our target almost exactly. Now, the next area would be 38.3 to 5 is what I would be expecting. I think we even pulled a bit of a fib here, if I'm remembering correctly. Yeah, so it's actually more like 38,150 to, we can, yeah, I don't know. Maybe we just pulled it down, try and move. Okay, there it is. There it is. It spiked the 1414. So it took out the one spot extension off of this lower low on a close, by the way. It spiked the 1272 1414 area, so 38 to 38 120. Yeah, next big area is going to be the 1618, 38 2 to 3 to around 38.5. Yeah, 1786 up there, just below that to the 2 spot at 38.5. So there is some confluences there. If we pull the current move up, yeah, as long as it's closing above the upper first, it's closing above the 618. So that would maintain its trend to the upside. And I'd be looking for those areas to get hit. 38 2 to 3, 38.5 next. So cool. It's nice when a plan works out, right, Jimmy? Yeah, I hear you guys over there. Yeah, so this is beautiful spike right into the upper third. If it does close above the upper second today, that's going to provide that expansive posture coming off of 13/5 right now for BBWP. Start closing above the upper second. We're looking at a nice compression to re-expansion, and we're probably going to see this thing march. So as long as it's closing above 37,936 today, then we'll see that expansion continue to kick off to the upside. As long as it's closing above the upper first, it's maintaining its expansive posture. 37,750 is what you want to watch there. So as long as it's closing above there, looking good. Oops. Let's go ahead and take a look at NASDAQ, because I believe NASDAQ's also doing quite well. And it did already kick off expansion on its Friday candle. It has come back to retest after a nice gap up, retest that upper second standard deviation, so 17,330. Very, very nice. And it hit our about $50 lower than our target there. But we did have a range about 17.4 to 5, I believe. It split the difference at 17.450. 17.5 is the next big area to take. Above there, 17.6 to 7 and 17.8, I believe, are going to be the bigger ones that we were looking at. We can take, there's a few different ways you can do this. If you want to do a trend-based fib, you can do that. Because it is a bit of a blue sky. Didn't quite hit the 17 500 area at the 1414. 1618 is it? Excuse me. Sorry. Wow. My apologies for coughing directly into your ear holes. All right. 17611 on the 1618 for a trend fib. Yeah, we could take that. Let's see if we have confluence though on a regular fib pull. There's a few different ways to do this. We can do the downside move on the breakout, hit the 618. Next big area is 786, which is 17,600. So yes, we have confluence with that. We can take the move here where it spiked the 50% and then moved up. It's already at the 786 and the 188 as at 17,500, 2 spots at 17,600 basically. So yeah, 17,500 to 600 is the next big upside area to watch out for, as long as NASDAQ is, we're talking dailies, 2-day. We're going to talk again on Wednesday. So we're talking between now and Wednesday as the potential. And then in this case, closing anywhere above the upper second at 17,300, going to maintain this expansive posture. And as long as it's closing above the upper first, this is looking brilliant. And that's at 17,050. So downside risk is right back to the basis right now, and that is at 16,750 to 16,800. So kind of give it a zone if it did happen to lose that upper first in the next day or so. As long as it's trading above this close at the base that closed right on the basis, I should say, which is coming in at 16,736 with the low coming in there at 16,500 to 16.6. It's looking pretty damn good. 17,200 is the pivot, but it's more about expansion right now, and we're seeing this start to really kick off on the daily. Did SPY hit 485? It did. So we had our close come in at 42, and it hit 45. What was our next target? 485. So above there, of course, 490. Take it 5 points at a time on SPY, at least with the way it has been trading. As long as it's closing, you don't want this to turn into an evening star, but as long as it's closing above the upper second here, it's going to maintain its expansive posture, and that is at 43.50, right? No, it's at 42.74. 42.74 is going to be the posture that you want to see on this, but it could even come right back to the 480 to upper first. So 480 being the prior all-time high. Upper first is at 478. As long as it is trading and closing above the basis, I'd be looking at this. Upper first is where you want to see it maintained for expansive purposes, but as long as it's above the basis, still pretty good. And that's coming in at 475 likely by this next close. And all good in the hood as long as it's trading and closing candles above this prior low, at least as it stands right now, at 471 on the close to the wick there at 469. Nice. Always got to have the meme numbers involved somehow. And 482 is going to be the pivot. I'm not as concerned about the pivot right now. It's all about expansion. So you want to see it maintaining above that upper first to continue with this expansion. And, I'd still keep an eye on structure, though. If it paints an evening star up there, a little shooting star, and starts to close the next candle below, we're looking for mean reversion back to the upper first basis area. 478, 475, maybe even a swing down to that lower first at 470. It wouldn't be out of the ordinary to see that. So looks good. I like new all-time highs. I like selling into new all-time highs. I like bracketing and positioning on options for new all-time highs as well. Yeah. We'll see how this ends today, but it's got about a half an hour painting a fairly ugly doji, but evening star dojis and then a doji up here on the tops, and a little bit of a rejection here on Dow. Not that concerning until we see, big moves that take out lows and or lower highs. And then then come back to it. $40,000 has been regained on Bitcoin. 40,200 range. Yep. So just so you know, we've now officially done exactly what I said to look out for in the lower term timeframes. And that is a front run of the 39 to 38.5 area. And the reason why I say that in the lower term timeframes is because now it's trading back above after a move down. It was front ran at about, here 39,372 on Coinbase spot. So that front run is now occurred. Occurred. We've seen the big volume come in on this low. It has regained a big volume area. So the next area to look for here, on the 15-minute, you have to look local, right? Right around the basis band of the Bollinger Bands, and that's 40,350 at the moment. If it can start to reclaim that, change its trend and or come back down, make a higher low, lower low on divergence, then we're looking for more. But yeah, this is getting into an area where it's a little dicey for shorts, especially short breakdown traders. They're likely to get their asses handed to them. Doesn't mean they will. I mean, if you're not stupidly high leverage, then this shouldn't be too crazy to weather if you are very bearish. But we got bull divs popping on all the lower term timeframes now. I believe the hourly might, it's got to put in a swing low followed by a closing low, but it's likely to follow through. One of the big things I would pay attention to as well, the 4-hour populating bullish divergence and turning at the same time. We are not having success with this RSI right now. Okay, let's go to a different time frame and see if it'll populate. Well, shit out of luck on the 6-hour, that's for sure. Let's see what the 4-hour is. So, I mean, most of this is probably going to be lower term time frame, mean reversion plays. 4-hour is nope. No local bull divs. So you're probably likely to see this play around, but at least for the shorter term timeframes, like I said, beware of front runs. We already have seen that. Very likely this comes back down and tests the lows and lower. But now you got to keep an eye out for potential divergences building up on the 4-6 hour. Stoke turns, stuff like that for sustainable mean reversion moves. And then we come back to it on the daily eventually. So I'll be talking to you guys obviously on Wednesday, and I will have a staring at charts tomorrow. But yeah, a little bit of a free-form conversation again today. You lost your voice on yesterday's game. I can understand that. Oh gosh. Yeah, man. What a bummer. I'm a Bills fan, so just so everyone knows. A wide right kick. Everybody wants to be all over Josh Allen for throwing that pass to the end zone and not taking the underneath route. If he didn't get slammed into that ball, that's a throw he makes. Receiver was open, ball fluttered because he got hit while he was going through his throwing motion. That was a good decision on his part. But, man, we were in the position to at least tie it up. Obviously, giving Mahomes the ball back with time left is never a good thing, especially if you're a Buffalo Bills fan. But, man, it's crazy. Crazy wide right is just a theme. It's like twisting a knife. For those that don't know, the Bills went to 4 Super Bowls. The first one they should have and could have won. And kick was wide right. Much in the same manner that yesterday's kick was. So, but hey, they overachieved this year. Allen played through with a torn shoulder in his throwing arm. Had injuries all over defense. We got a Houdini act by Stephon Diggs midway through the season. Got injuries all over the defense is really, really what was killing us. Unfortunately, that is the nature of the NFL. But hey, I don't mind seeing new faces over there in the NFC. You got got the Lions coming up. Man, NFC, you got San Francisco and the Lions going to be a good one. And then, of course, you got old reliable Patty Mahomes. Um, I I'm not a Chiefs hater, but I would like to see someone else in the Super Bowl. So hope Lamar can actually get it done against the Chiefs. They got a freaking killer defense, man. Just so you know, they do. Yep. Yeah, the Bills had a spectacular comeback in the regular season. They did, and it was just through sheer power of will and Josh Allen being a monster. I mean, Josh Allen is even yesterday. Opponents of the other teams, stuff like, man, he's like the best football player on the field. He needs help. Like these guys are dropping bombs and like it's hitting him right in the hands or right in the arm. Sherfield had one spike off his arm. Diggs, literally one of the greatest rainbow passes in history. And like, what does he do? Alligator arms that shit goes right. I don't know why he was turning to jump for it. Like you could literally just hands catch that thing for the touchdown at that point. I don't know why he pulled up, or maybe he was having trouble tracking the ball or what was going on. Who knows? But you got to catch that. You get paid the big bucks. You got to catch. That's a freaking dot. Dude threw it from the 10-yard line to the 25 of the other team to the other side. That's a rare human ability. I don't even think Mr. Mahomes, who has a rocket of an arm himself, has done one like that. At least not in a long time. And of course, he had alligator arm receivers all season too. So, no complaints. That's a good fucking team. They're all good teams at this level, right? And you got all the best. That's what you want to see. You want to see the best playing the best. But the Lions against the San Francisco 49ers is going to be an interesting one because the 49ers are a hell of a team. They are built to withstand a team like the Lions, but the Lions just, I don't know, they got grit, man. That team is run by a nutcase as a head coach, who I quite frankly love. But yeah. Oh yeah. You joined during the football talk. That's because we're done with analysis. Yeah, so we're just kind of picking up on my voice is a little shot because of that. But as I said on X or Twitter, not gonna lie, I'm sad that they lost, that the Bills lost, but I'm not like disappointed. I'm not. It doesn't feel the same as it did in years prior. They way overachieved this year. I was not expecting them to make it this far with all the injuries they had. Just Josh Allen being a force of nature. And I mean, if he could have played linebacker, because we were basically down to we literally our starting middle linebacker who calls the plays. You could tell he was limited. Our normal guy is allowed to check, and he was not. He was not checking 2 different plays and readjusting. But kudos to him. Klein came off the couch, freaking 15, 16-year veteran, came off the damn couch. He was literally on the couch 2 weeks ago, and he said, still, it was a 3-point damn game. Come on. That's bravo to those guys. They overachieved. But overachieving isn't what you aim for in the NFL. It's winning. But I'm not quite as broken up about it as I was in years prior when the expectation was you get to a Super Bowl and you win it. Yeah. Anyway. I will say, Bobby, who says, yeah, but giving the ball to Mahomes, even if they did score, basically, give the ball back to Mahomes, he's still got time left. The defense clamped down on them the last few. They had some 3-and-outs. And the turnovers. So the defense was finding something to work on. Obviously, it's Patrick Mahomes. You can't count that guy out until the clock hits double zeros. Or quad zeros in this case. The guy's, he's considered the best in the league, and maybe of a Brady contemporary if he gets another Super Bowl. But he's dude's a freaking monster. That he doesn't talk like a frog anymore, though. And that bums me out. Like had one thing I could make fun of that guy about. Said he sounded like a frog. Yeah. And he's not living up to the Kermit the Frog memes anymore. Yeah, anytime, Bobby. All right. Football talk is over, I guess. That concludes our football therapy session. For you guys that are international, my apologies. I know that it's not quite as big over there, although there's obviously a few international fans in the chat here. Yeah, a lot of somebody had mentioned to me like America's team now is seems like it is the Bills. Yeah, I mean America's team was kind of the branding that the Cowboys got, but it seems like the Bills are very popular and maybe even more so internationally. I do agree with that. Bitcoin with the deviation. Yes. My suggestion is for anyone, if you're sad about football, you find appropriate areas to buy Bitcoin, not financial advice. If you're happy about football, your team has won. You want to celebrate. Find an appropriate area to buy Bitcoin, not financial advice. If you are just walking down the street contemplating life, you should probably open up the chart, find an appropriate area on the chart to accumulate Bitcoin, not financial advice. And in fact, if you are sitting on the toilet where you would typically have all of your internet interactions like X, Discord, Facebook, all of those places that are most visited when sitting on the toilet, you should open up the chart. Find the appropriate place that you would like to buy Bitcoin and buy Bitcoin there. Not financial advice. But I'm always trading fiat for Bitcoin. I suggest that others do the same. Not financial advice. Of course, as always, I don't give financial advice. I just look at charts and call them pretty darn accurately because we have a system. And you guys have been wonderful today. I do appreciate you hanging out. What is one thing though here, Baba? What are you talking about? I think something that you might have said in chat didn't come through. You said something about resistance at $6. I did want to address that before I left. I want to know what that was regarding. And if you are in the chats and you are listening to me still, I want to thank you for hanging out. But if you could hit the like button, that does help the channel. All the information I give out is free. Indicators that I share with you guys that are mine or developed by me are free and available in the link in the video description. Yeah. I had to drop a gloat. Yeah, dude, look, when you know what you're talking about, it's okay to brag about it. I'm not being pompous about it either. Like, look, you know who else is really good at this shit? MDX. You know who else is really good at this shit? Guys like Credible Crypto. I mean, he called the deviation, and just like I called the deviation, at least initially, may not have the same idea as he does as to where it's going. You know who else called a lot of this? Rickus. You know who else? Eric Crown called a lot of the pullback. You know who else called it, Bobby? Bobby also called this. You know who else? Torque. JR probably had this area on his chart as well. Somebody in the server pulled a fib and was like, this is the one. So yeah, I mean, all these guys should be glowing. This is stuff that, look, we nail this shit on this channel a lot. And I don't do this shit for, you know, I don't do it for the likes and views, and I don't run any kind of grift, right? I don't have a, Landy doesn't have a grift yet. You can, let's grift. You want to grift? Let's grift. Should I sell courses? No, I don't really want to do that. Do I want to have paid programs that people subscribe? No, I don't want to do that. It's just not my thing. I want to teach you guys how to trade, and in that context, I'll gloat about it because we nail it. And the reason why we nail it is because we have a defined system for nailing it. And a lot of it is experience as well. And as the more you guys hang out, the more experience you'll get with this kind of stuff, right? I should be shilling ordinal scams. Yeah, right? Like, what's the grift? Like, there is no grift. You guys know that. And I do like that things are low key, but if you want other people to see this and learn how to do this, even if you have experience in, trading or in the financial sector, I think that what we talk about here is very valuable because of its high accuracy. But I'm not giving you trade setups. You have to figure that stuff out for yourself because everybody's account size and risk tolerance is different. But every area of interest that we talk about tends to get hit almost to a T. And it's just because we have a well-defined system. It's not magic. In fact, it's stupidly simple. It doesn't get much simpler than what we're doing, and we nail it every damn time. And when I say we, it's not just me. I've watched you guys post your stuff. I've watched you guys, on your X accounts, posting what you're seeing, and it has worked. Whether you're following a combination of what you see me do and you're just looking for confluences and you have your own style, great. Or some that I encourage you to copy this style and have significantly increased the value of your accounts, which is the goal. Yes, Jimmy says, don't get stuck in bias. Yeah, don't get stuck in bias, ever. Go ahead and hit the likes. I'm going to let you all go. I'm going to turn on the music. For those of you that like to hang out and listen to some beats, you're more than welcome to. I'm going to have we'll do what, like a 15-minute timer on this? Yeah, because that'll put us, that'll put us at 1300, at least my time. Oh, God. You're going to hear a ding in the background. My apologies. What is it? It's the 22nd. That's why. There we go. All right. So I want to wish you all a wonderful morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. I want to thank you again for hanging out with me. And with all of that being said, Landy out.
Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army.
Thank you, over. CBR straight gang, over, well by 85, over.